Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, December 29th, the year 2019. Let's talk trading. It's time for the weekly open and gap. Yes, I'm posting this video a little bit later because I was watching a football game. So, this is the beginning of the last trading week of the year 2019. So, for these last couple of trading days, everybody, let's have our risk management in place. Let's not lose more than we're willing to lose on any one particular trade. And we start off the week, all the gaps have filled. Remember, fellow traders, these videos for educational purposes only, and your results may differ from mine. And never forget that trading is extremely risky. You could lose all of your money. So if you're seeking financial advice, investment advice, trading advice, make sure you get your advice from an accredited financial professional. That way, when you lose all your money, you know you got your advice from an accredited financial professional rather than somebody you heard on a YouTube video or read on an online trading forum. Okay, disclaimers out of the way. And as you can see, we have left the lower wick zone of the previous week's candle. We broke down through that low. In fact, there's 19 pips to be had. And as I mentioned earlier, all the gaps have filled. And, okay, yearly open on the dollar yen, we are down 52 pips. So you can see here, for some strange reason, price just doesn't seem to want to get above that weekly open and stay put. So if we look over here at the monthly chart, you can see what it looks like. We went up, we went down, and we're pretty much almost back to where we started, to that yearly open. Okay, we're putting in the first trading day of the week's range right here. First trading day of the month we see right here, and first trading day of the year. So we're in those ranges still. And we've got the weekly buy zone here. As you can see, price started here. It's a little gap down, filled that gap, and then turned around, went right back through that weekly open. So far for the week, that's the month right there, monthly range, 130 pips. So far, you can see we got about 42 pip range. Previous day was an inside bar, and you can see here once again taking that break out of the previous day's low. You'd be up about 25 pips. Now, pay attention. You see, we had an inside bar on the week 2 weeks ago, and we broke through that inside bar. That's the inside bar low. We're 4 pips below it. So we broke through the daily inside bar and the weekly inside bar low here. And now you can see monthly inside bar high 3 months ago was way down here. And you can see we've got some new action here. Inside bars, no weekly inside bars last week, and we have some monthly inside bars from last month. Range, nothing over 100 yet. Let's see, we're about 6.5, 7 hours or so into the first trading day of the week. And you can see we put in an H1 highest open here for the week, and then just prices dropped. We just put in an H1 weekly lowest open right there. Weekly H1 lowest open right there. Buy zone. Okay, there's the pivot. Price hit the pivot, but once again, it's within the buy zone, no real bias. And then price hit the short zone and fell through. Rat zone. Range is large enough, but I usually like to see it a little bit larger. And I do believe I posted that new rat zone indicator here. And just to show you, let's see, the breakout pips 20, and the pips trigger is 20. And so the way that works is it just looks to make sure price is bigger than twice the pip trigger. Weekly pivot is 109,475. And did we actually hit it? I can't seem to. Okay. High 109.473. We missed it by 2 points. Almost returning to the monthly pivot at 108.99. But that weekly pivot, looks like we just missed it. Okay, you can see here, yes, we missed it because it's still showing. If we switch back over to the daily, you can see that we took out the pivot and we almost missed this one by 0.2 of a pip. We almost took this one out. I think we're going to take this pivot out. And that'll take out all of the December pivots. We can take this pivot out. But you can see here we're going to have 1, 2, 3, 4, 5, maybe 6 open pivots for the year. Price action, once again, even limited range price doesn't like staying between these two lines and just taking the trades. What you see a 3-ball here. Price reversed out of that area between the 00 and 0.1. And now we're between the 0.1 and 0.2. Wick zone. We started in the wick zone, came out of it, back into it, and back out of it. And just using the previous daily, weekly, monthly open, high, low lines, you can see here once again some nice trades at these horizontal lines. As far as the Einstein line, I just opened the profile a little bit ago. Not much action. And you can see here at the tick level, there's just not much action. Targets here, let's look at the week. You can see we've already hit the weekly open minus the 8R2 times 0.5. So we've already gone through it, and we've actually gone into the daily ATR zone to the south here. We're in that zone between the ATR5 and ATR13. ATR5 was the min, and ATR13 was the max, producing this zone. But you can see here, because of the very narrow ranges that we have, that it looks like we're going to be in the weekly ATR zone sometime soon. In fact, the halfway point for the 14 is actually bigger than the full ATR2. So once again, these ATR ranges on the yen are just kind of compressed because we're just not getting the range. I mean, 41 here, the average is only 39, so we've already exceeded the average range here, range of 41, but for the weekly, it's 134, so we're not quite halfway there yet. You know, I still have the squigglies up, just for anybody who likes looking at the squigglies. And we've got the EMA 5, the SMA 50, and the SMA 200. So for you squiggly traders out there, and that's what you're looking at. So that's it for the week. I hope you had a happy holiday weekend there, nice and safe. And Santa Claus, I hope, treated you really good. Um, and coming into the end of the year, time to do some reflecting. Think about what you're going to do different next year, what your strengths were this year, what your weaknesses were. Make a list, check it twice. And then when you start trading in the new year, just remember it's not what you trade, it's how you trade it. So continue the draining of the banks.